Yes guys, so welcome back and we will continue our discussion on IND AS 116. There are a couple of questions which I will solve which are a new addition as far as your ICA material is concerned. So we'll look at those two questions. Both of the questions relate to lease modification itself. Both of them are relating to lease modification. So let's try to solve those questions first. Look at first the question number 71. Entity W entered into a contract for a lease of retail space with entity J on January 1st of 2017. The initial term of lease is 5 years with a renewal option for a further 3 years. The annual payment for the initial term and the renewal term is 1 lakh and 1,10,000 respectively. The annual lease payments will increase by the consumer price index at the end of the preceding year. For example, the payment due on 1st January 2018 will be based on consumer price index available on 31st December 2017. We have solved a similar question, but I would like you people to come, at least put an effort to solve this question as well. Entity W's incremental borrowing rate at the lease inception date 1st January 2020 is 5% and 6% respectively. So at inception date, that is 1st January 2017, it was 5%. On the lease modification date on 1st January 2020, it was 6%. Consumer price index on the commencement date is 120. On the modification date is 125. At the lease commencement, entity W did not have a significant economic incentive to exercise the renewal option. In the first quarter ending on 2020, W installed a unique lease improvement into the retail store, which is estimated to have a life of 5 years. So therefore, you can only recover the cost of improvement if they exercise the extension of lease. W has determined that it would only recover the cost of improvement if it exercises the renewal option, creating a significant incentive to extend. Now, if W is required to remeasure the lease liability at the first quarter of 2020, yes, it is required to remeasure because the exercise option has become Today, it has become reasonably certain that entity W will extend the renewal option. So first, let us start with that. I'm looking at question number 71. Start the answer. Entity W is required to remeasure the lease on 1st January 2020. Why is that so? Since it is reasonably certain that W will exercise the renewal option. This accounts to lease modification on that particular date. Now I have to recognize it. Now go back to the question and determine what is the initial recognition of lease liability and the value of ROUSL. Look at it. The lease rental was 1 lakh, right? It was 1 lakh for initial term. For the renewal term, it is 1,10,000. It is based on the consumer price index of 120 and 125 on the date of commencement and on the date of renewal. Now let's start. If I take 1 lakh, initially when I recognize the lease, where the annual lease is for 5 years, the renewal option is definitely not certain. So I'll only consider it as 5 years lease term. So when I look at the 5 years lease term and 1 lakh is the lease payment with a rate of interest at 5%, what is your initial recognition of ROU asset and the value of lease liability? Initial recognition on 1st Jan 2017. On that day, the value of lease liability is equal to the value of ROU asset. Since he did not talk about any incremental direct cost of lease, he did not talk about cost of dismantling the asset, he did not talk about involvement of lessee prior to the commencement of lease, neither he spoke about lease incentive. So the value of lease liability should be equal to the value of ROU asset. That should be equal to 1 lakh of lease rental multiplied by present value annuity factors, 5% for 5 years. Calculate 1 divided by 1.05, 1345. PVA 4.3295. So 1 lakh into 4.3295. That should give me a value of rupee 4,32,950. That is the initial measurement of the ROU asset and the lease liability as on 1st January 2015. Correct? Now, if your ROU asset has an estimated useful life of 5 years, estimated useful life is equal to lease term, and initially when I measured the lease term, it was supposed to be considered as 5 years. Therefore, if I take 4,32,950 divided by 5, the amount of depreciation to be charged per annum we charge per annum is equal to rupees 86,590. It is rupee 86,590. Correct? Now let's move on. Now if this is the 86,590, the lease date modification was 1st Jan 2020. Date of lease modification equal to 1st January 2020. At the beginning of the 4th year. On that day, let me try to determine what is the value of ROU asset and also try to determine what is the carrying value of lease liability. Carrying value of ROU asset. Numbers please. What was the original value of ROU asset that you determined? 4,32,950. You are estimated to depreciate it by 86,950 every year. 4,32,950 minus 86,590 depreciated over 3 years should leave me with an answer of 1,73,180. That is the carrying value of ROU asset on the date of modification of lease. Similarly, I also want to find out what is the carrying value of lease liability on the date of modification. carrying value of lease liability. To get this carrying value of lease liability on the date of modification, I'll have to prepare an amortization schedule now. Prepare the schedule. Maintain columns. Here, opening lease liability, finance cost at the rate of 5%, which was measured initially on the date of inception, lease payments made every year to the extent of 1 lakh. Finally, determine what is the closing liability. First year, the opening value of liability was how much? 4,32,950. 4,32,950. Calculate 4,32,950 multiplied by 5%. The finance cost would be 21,648. I know the repayment every year is 1 lakh. Therefore, my closing liability is 3,54,598. Year 2, that will become the opening, 3,54,598. Again, add it with the amount of finance cost and reduce it with the amount of lease payment so that you get what is the closing lease liability. Again, multiplied by 5%, 17,730 minus 1 lakh of lease payment made during the year. Final answer would be 2,72,328. Year 3. Now at the end of year 3 modification happened. So this is the last year which I am trying to determine. 2,72,328 multiplied by 5%. 13,617 minus the amount of 1 lakh of repayment. I should be getting the answer of 1,85,945. 1,85,945 by adding the finance cost each year and by reducing the amount of lease payment each year. This is the resultant lease liability. So at the end of year 3, it was 1,85,945. That will be the opening liability on 1st January 2040. This is rupee 1,85,945. Now 2-3 rupees here and there I might have rounded off. It's okay. Now on this day there is a modification to the lease. On this day, you know what is the carrying value of ROU asset. You also know what is the carrying value of lease liability. On this day, there is a modification to the lease. What is the lease modification? Look at it. Now, on this day, at the commencement date, W did not have a significant economic incentive to exercise the renewal option. But in the first quarter of 2020, W installed a unique lease improvement into its retail store, which had an estimated 5 years of economic life. W determined that it will only recover the cost of improvement if it exercises the renewal option, creating a significant economic incentive to extend the lease from 5 years, it will become 8 years. But remember, there is a CPI index which is supposed to be applied at 125 to increase your lease rental. Apart from that, one more improvement in your lease rental is regarding your extended term. For the extended term of 3 years, the lease payments annually should be considered at 1,10,000 and not at 1 lakh. So, Let's try to write down our lease modification then. Modified lease. My modified lease today has a lease term of 8 years. Correct? Out of this, 3 years are done. So further 5 more years to run. My lease payment, I will split my lease payments into 2 parts. The first part, which represents year 4 to year 5. Second part, which represents year 6 to year 8. 2 years and 3 years. Calculate 1 lakh into 125 by 120. Look at the consumer price index in the question. Consumer price index in the question, it was 120 at the beginning or the commencement date, became 125 subsequently on 1st January 2020 when the modification is being accounted for. So look at the modification and apply. 1 lakh into 125 by 120 is 1,04,167. While for the next 3 years on the renewal term, it was 1,10,000 assessed at the commencement of lease. It should also increase with the consumer price index. Therefore, this amount shall be 1,10,000 into 125 by 120, 1,14,583. Would have been 1,14,583 would have been my lease payments. On that day, the discount rate also got revised. My discount rate to be considered right now should be, look at your question again. On 1st January 2020, the incremental borrowing rate, which was 5% on the date of inception, should be considered at 6%. Consider 6% as discounted. Based on this information, I want to calculate what is the revised lease liability on 1st Jan. Revised lease liability on 1st January 2020. Calculate, guys. Put a heading as year, cash flows, discount factor, discounted cash flow. I couldn't have applied your present value annuity factor straightforward. If I had to apply, if you want to apply your discount factors as present value annuity factors, then I would have written like this. 1,04,167 multiplied by, that is the first payment, right? Multiplied by PVAF 6% for 2 years plus 1,14,167 multiplied by PVAF 6% for 3 to 5 years. You can calculate like that also. I don't mind. Even if you want to calculate like that, you calculate. I'm just writing down each cash flow separately. But even if you want to apply this formula, you are 100% correct. There's no doubt about it. 4, 5, 6, 7, 8. Up to 4 and 5 years, it was the original lease. Next 3 years is a renewed lease. Amount of lease payments were 1,04,167. 1,04,167. Renewed term, it was 1,14,167. Sorry, 1,14,583. Sorry guys, not 167. 1,14,583. I think you people have already corrected it. 1,14,583. Last year also the same cash flow. 1,14,583. Right now the discount factor should be considered at 6%. 1 divided by 1.06. First one is 0.943. Second one is 0.890. Third one is 0.840. Next one is 0.792. Next one is 0.747. Calculate discounted cash flows now. 1,04,167 into 0.943. 98,229. 0.890 if you multiply 92,709. 1,14,583 multiplied by 0.840. 96,250. 0.792 would be 90,750. 0.747 would be 'Check. Yes, I'm assuming that the lease payment are made at the end of the each year. Correct. Get me the total. $4,03,531 I get. 4,63,531. If you would have applied present value annuity factor, somewhere it would have been almost the same answer. Someone who's applying present value annuity factor, if I want you to help you, I'll help you. 1,04,167 multiplied by 1 divided by 1.06. Present value annuity factor of 2 years is 1.833. Or if you want 4 decimals, 8334. Plus 1,14,583 multiplied by present value annuity factors 1 divided by 1.06. 4.2124 minus 1.8334. When I want 3 to 6 years, 3 to 5 years, first calculate for 5 years, then reduce it by the first 2 years. That is how you will get it. This answer would have been, how much is this answer? 4.214 minus 0.834 multiplied by 1,14,583. This would have been 2,72,593. First part would have been 1,04,167 multiplied by 1.8334. 1,90,980. Add, you will get 463,573. How much did you get if I took each year? 463,531. 42 rupees of difference you will get. It's okay. I'm picking up this figure, guys. If you calculate by PVF, you might have landed up with that. Around 40 rupees of difference you will get. It's absolutely fine. It's absolutely fine. Approximately the same answer. Because of the present value factors, I'm getting a difference. What was the original value of lease liability? The original value of lease liability at the end of 3 years was 1,85,945. Now, after modification, the lease liability became 4,63,531. So now find out what is the increase in lease liability. Increase in lease liability and ROU asset upon modification. Due to modification, the value of both these things will change. The amount of change in lease liability is exactly equal to the amount of change in ROU asset. Calculate. Revised lease liability is how much? 4,63,531. I'm not taking the PVF one, guys. I'm taking the present value factors one. 40 rupees of here and there difference. It's okay. Carrying value of lease liability on the date of modification, 1st January 2020. How much was the carrying value of the liability? I already have. Go up above and check. 185,945. 185,945. Calculate 4,63,531 minus 185,945. This is P 277,586. This is increase in lease liability and ROU asset. It was 2,77,586. Clear? What is the entry that you pass here? My entry to be recorded here is ROU asset account debit to lease liability. For the same amount, 2,77,586. Because you passed this entry, the value of ROU asset has also changed, which in turn also reflects a change in depreciation. So if I want to calculate revised depreciation, per annum on ROU asset, first start with the original carrying value, then add with the increase. What was the carrying value on the date of modification? On 1st January 2020, after depreciating the asset by 3 years, I arrived at the value of ROU asset at 173,180. I have arrived at the value of 173,180. But this value of ROU asset is increasing. Increased due to lease modification. Because there is a lease modification, there is an increase in the value of ROU asset. What was the increase in the value of ROU asset arising due to lease modification? The same amount of increase in the value of lease liability, that is 277,586. Today, the revised carrying value would have been 4,50,766. This is revised carrying value on the date of modification 1st Jan 2020. Now, this asset should be depreciated over the remaining useful life of 5 years. Remaining useful life, unexpired lease term. It is now 5 years. It was earlier 2 years only remaining useful life. Now I have considered it as 5 years. 4,50,766 divided by 5. 90,150. Depreciation per annum from 1st Jan 2020. Subsequent to the date of modification, I'll have to charge a depreciation of 90,153. What was the earlier depreciation? It was 70,000 some change. You remember the earlier 86,590. Now 86,590 got revised, and today I will charge a depreciation of 90,153 instead. Clear? If you have missed out the calculation somewhere, I'll give you time to write down. I'll just start from the beginning once again. First, let us start with initial recognition at the time of inception of lease or commencement of lease. I measured it on the basis of 5% discount rate over 5 years because renewal is not certain, which is 4,32,950. If that is the value of ROU asset, then I have determined the depreciation per annum over 5 years, 86,590. I determined what is the carrying value of ROU asset after depreciating it by 3 years, and also what is the carrying value of lease liability. Now depreciation is 86,590, 3 years depreciated from the carrying value. You can easily determine the carrying value of the ROU asset. But this is where I determine the carrying value of lease liability by applying the amortization schedule. Yes, add the finance cost, reduce the lease payment. Now comes the modification concept. The modification is for 8 years because 3 years extra they have included in the renewal option has been included. 3 years is already completed, so further years is 5 years. Lease payment should be increased by consumer price index. The CPI on the date of commencement is 120. The date of modification is 125. Therefore, the consumer price index modification will increase the lease rentals over the original lease term, that is for year 4 and year 5, to 1,04,167. But subsequent to that, under renewal period, the lease rental is 1,10,000, which should also increase with the consumer price index. So multiply that 1,10,000 by 125 or 120 to determine what are the lease payments supposed to be done for year 6, 7 and 8. Total 5 years. Now you know the discount factor, you know the cash flows over 5 years. You identify and you determine what is the present value of all those lease payments to determine the value of lease liability on the date of modification, that is on 1st January 2020. The increase in lease liability I determined, and the same amount should be the increase in ROUSZ. Compare the original carrying value of lease liability on 1st January and what is your revised liability which I determined just now. Based on this, I will identify the increase and I will record the entry as ROUSZ account debit to lease liability. Since the value of ROUSZ has also changed, we will be able to determine what is the revised depreciation as well. Original carrying value was 1,73,180 after being depreciated for 3 years. Increase due to lease modification is 2,77,586, which is the same amount of increase in lease liability as well. Therefore, today the revised carrying value is 4,50,766. If I depreciate it over 5 years, that is the remaining useful life, the depreciation on the ROUSZ per annum from 1st January 2020 up to 1st January 2025, 5 years, is 90,153. Now the reason why I solved this question, though we have solved a similar question earlier in our workbook problem, was that this problem I have taken the lease payments towards the end of the year, that is lease payments are made in arrears. Earlier in the workbook problem I have solved it in advance. So the first lease payment always I took a present value factor as 1. Okay. So guys, someone has already rightly pointed out that earlier in the workbook question number 29, we started with solving the problem assuming that the lease payments were made at the beginning of each year. So therefore, I have taken the present value factor as 1. It will have a significant impact on the answer. If you look at the study material question, he would have solved it in the same manner by assuming that the lease payments are made in advance. So your answer will differ from study material answer. So let me show you the study material answer now. This is the study material answer. Right to use, I said, before the commencement of lease is 1,81,840. This is correct, what we got. It will also differ because of the initial measurement. If you look at the revised liability also, is amounts are correct. 1,04,167, 1,14,583. These amounts are correct. But observe the discount factors. The first discount factor, he has considered it as 1 because he is assuming that the payments are made for lease rentals at the beginning of each year. His increase is only 2,96,132. We have a slightly different rates. Even if you look at the rate of measurement, he is taking 1 lakh over 5 years and assuming that the first present value factor is 5%. So that is the only difference. I just wanted to show what would be the difference if you calculated it this way. Now, Guys, this second question or the 72nd question is one of the most crucial questions which he has included. Because it will have multiple aspects to this question. You'll have to break down each aspect, understand and then write down. Look at it. Lessee enters into a 10-year lease for 2000 square meters of office space. The annual lease rentals was 1 lakh payable at the end of each year. Very clear he was that the lease rentals are supposed to be paid at the end of each year. So you cannot assume anything. The interest rate cannot be determined. Therefore, the lessee's incremental borrowing rate on the date of commencement is 6%. It's a 10-year lease. 1 lakh is the lease payment. You can take present value annuity factor of 6, 10. Determine what is the initial measurement of ROU asset. Also the initial measurement of lease liability. At the beginning of year 6, 5 years are already gone. Lessor agreed to amend the original lease. And they intended to include an additional 1500 square meters of space in the same building starting from the beginning of year 6. They reduced the lease term just to 8 years. This is crucial. This is very, very crucial because it represents a decrease in the scope of the existing lease. Decrease in scope, we had to reduce the value of ROU asset also to the same proportion. We will see what is this. The annual lease payments for the 3500 square meters is 1 lakh 50. Guys, for the 2000 square meters, it was 1 lakh. For 3000 square meters, it is 1 lakh 50. So therefore, the lease rental is going to increase by 50,000 every year. Clear? It is payable at the end of each year, starting from year 6 to year 10. Lessee's incremental borrowing rate has increased from 6% to 7%. Consideration for the increase of 1500 square meters is not commensurate to the standalone selling price. For that increase, adjusted to reflect the circumstance of the contract. Consequently, lessee does not account the increase in the scope that adds to the right of use asset of additional 1500 square meters of space as a separate lease. So he is only concluding that additional 1500 square meters, though there is an additional asset, since the consideration is not equal to the standalone selling price, you cannot consider it as a separate lease. It should be considered as a part of the same lease contract. How should the said modification be accounted for? This modification, though there is no additional lease, I will break this modification into 2 parts. One is the additional space and the additional lease rental which is supposed to be paid, but this one cannot be treated as a separate lease. So it is a modification to the existing lease. Second one, because your lease term has reduced from 10 years to 8 years only. 10 years has become 8 years only. So this is a decrease in the scope of the asset. 2 different modifications, 2 different treatments. If I look at the first accounting treatment or this part where there is a change in the lease term, where there is a change in the lease rentals, then I would always say that the amount of change in ROU asset is equal to the change in lease liability. So I'll re-estimate the value of lease liability and I will determine this value. But if I come to this concept, if I come to the concept of the value of lease liability there, if you look at the lease liability when their lease term is reduced from 10 years to 8 years, then there is a decrease in the scope of the lease. So in such cases, wherever there is a decrease in the scope of the lease, ROU asset has to be reduced. ROU asset has to be reduced by the amount equal to the proportionate decline in the value of ROU asset. What is that proportionate decline? I will talk about. Let us first start solving this question. I will talk about whatever we have got. First, let us talk about initial assessment. If you want to read through the question, I'll give you 2 minutes time. Read through the question. I was talking broadly about 2 aspects of modifications in the lease. Read through the question. If you have understood, at least start with solving. At least initial assessment you should be able to get. So shall I start solving? I hope people have already started solving, guys. First, put the heading of initial assessment. Initial assessment of lease liability and ROU asset. Initial assessment in the value of lease liability and the value of ROU asset. Let's start. Here, you can directly apply present value annuity factors. Let me write down. Lease liability is equal to ROU asset is equal to lease payment are same, right? And the lease payment are same, you can directly calculate. It is 1 lakh multiplied by present value annuity factor. How much is the lease rate, discounting rate? Get the question and tell me. The discount rate initially assessed was 6%. Initially, it was considered at 6% for 10 years. It is 1 lakh of lease payment. 6% for 10 years. Calculate PVF. 1 divided by 1.06. 0.73600 or 01. 1 lakh into 7.36 is nothing but 7,36,000. When are they amending the lease? At the end of 5th year. So until 5 years the computation should continue. So let us determine. What is the carrying value? What is the carrying value of ROU asset at the end of year 5? At the end of year 5, when I am trying to identify the carrying value, then you have to go with the computation like this. 7,36,000 minus this 7,36,000 is assumed to be depreciated over 10 years and 5 years is the total depreciation charge so far. Calculate 7,36,000. So the carrying value of the ROU asset is equal to 3,68,000 at the end of 5th year. That is when the amendment modification happened. So let's see. Now we'll also have to find out what is the carrying value of lease liability. Carrying value of lease liability at the end of year 5. For this, we need to prepare a schedule of your amortized cost. Let us prepare. Here, what is your opening lease liability? What is the amount of finance cost at the rate of 6%? The amount of lease payments made. And finally, I'll come to the amount of closing liability. Let's begin with year 1 now. What is the opening liability? 7,36,000. Correct? I have to keep charging an interest and a lease payment of 1 lakh every year. Calculate 7,36,000 into 6%. 44,160 minus 1 lakh of lease payment every year will determine what is my closing lease liability, which is 6,80,160. Year 2, 6,80,160 multiplied by 6%, I get an interest of 40,810. There is a repayment of 1 lakh towards lease payments. Closing is 6,20,970. Continue for year 3 then. 6,20,970. Add it with 6% of interest charge. 37,258. Reduced by the lease payment every year 1 lakh. It will give me 5,58,228. Year 4, 5,58,228. Finance charge at the rate of 6%. 33,494. Reduced by lease payment of 1 lakh. Determine the amount. $4,91,721. Actually 722. That's it. I'm coming to the last year. 4,91,722 multiplied by 6%. 29,503. 1 lakh. $4,21,025. I've been adding interest, reducing lease payment to get the closing lease liability every year. Commonly, I've applied this. Correct? Now, I know that the closing lease liability at the end of 5th year was 4,21,225. So I'll write it down here. 42125. Now guys, this is where the modification started. The modification happened in year 5 on 2 different terms. The first modification happened when there was a reduction in the lease term. Second modification happened when there was an increase in the underlying asset and increase in lease payment. I am breaking down these two. First, I am talking about decrease in scope. First, I am talking about modification number 1. Modification number 1. Decrease in scope. When I talk about this decrease in scope, I'll have to record an entry like this. My entry to be recorded is lease liability account debit the reduction in value of lease liability because it has been reduced to 3 years. To reduction in value of ROU asset, difference should be transferred to P&L. I'll leave some space. I'll make sure that I'll write the entry at a later point of time. So as of now, let me understand what is a reduction in lease liability and reduction of ROU asset. First, let me start with reduction in ROU asset. Now this, let me first begin with what is the carrying value of the ROU asset. Carrying value of ROU asset on that date when there was a modification, the carrying value of ROU asset was 3,68,000. Correct? Now, original remaining useful life originally when I had useful life, I have assessed the useful life of this asset, remaining useful life, as 5 more years to run. Because the total lease term was 10 years, 5 years are completed. Now when there is a revision in the lease term, revised remaining useful life, now lease term is only revised to 8 years. So definitely there is a decline in the useful life of the asset because now the useful life of the asset can only be considered as 3 more years. Therefore, what is the reduction? Proportionate reduction in ROU asset. What is your proportionate reduction in the value of ROU asset? Calculate. It was 3,68,000. Earlier I assessed this for 5 years, but today I am reducing it for only 2 years. I am reducing it by 2 years, assuming that there is another 3 years to run. Calculate 3,68,000 into 2 by 5. The amount of reduction to me would be 1,47,200. Check this computation. This is the proportionate decline in the value of ROU asset because your lease term is reduced to only 8 years from 10 years. The reduction is 2 years. So proportionately reduce the remaining value of ROU asset or the carrying value of ROU asset. Got this? Let me place the answer then in the entry. 147,200. ROU asset should be reduced by 147,200 because there is a decrease in the scope of the lease. Now there is also a reduction in the lease liability as well. Let us calculate. Calculate, guys. There is a reduction in ROU asset Let's talk about reduction in lease liability. Reduction in lease liability of original lease. Original lease was 1 lakh. So that means, what is the revised lease liability? My revised lease liability on reduction of lease term guys, revised lease liability will be 1 lakh of lease payment on the original lease. Don't consider that 50,000 rupees of increase. So now into present value annuity factor, how many more years to run? 3 more years to run. Take it at the rate of the same 6%. I am not taking revised discount rate because revised discount rate is only considered in 2 circumstances. One, when there is a revision as far as when it is reasonably certain that the lessee will extend the lease term or it is reassessed, or when it is reasonably certain that the lessee will exercise his option to purchase the leased asset at the end of the lease term. Only in these 2 situations I'll take a revised discount rate. Here none of these things happened. It's only a reduction in lease term. Therefore I'm taking the same original discount rate and trying to identify what is the reduction in the value of lease liability. 0.06, 3 years, 2.673. This amount is 2,67,300. What was the carrying value of lease liability? At the end of year 5, that is on the date when you modified the lease term, the carrying value of lease liability, go up above and see the schedule and tell me. 4,21,225. Considering these 2, I want to determine the reduction. 4,21,225 today became 2,67,300. Therefore, I got a reduction of 1,53,925. Check. My reduction is 153,925. This is a reduction which is arising due to the lease term of 10 years being reduced to 8 years. Yes. Now this reduction, if I go up above and place it into the entry, look up above, decrease in scope, pass the entry, 1,53,925. This should result in some difference which is transferred to P&L. It is nothing but my balancing figure. 6,725. This is answering the first part of the question, where there was a decrease in the scope of the lease and there is a lease modification. But that is not the end of the answer, because there is one more modification in the question. What is the extra modification? Another additional asset for which I have agreed to pay an additional lease rental of another 50,000. So I will start paying 1,50,000 over next 3 years of leases, and I'll take a revised lease rental or revised incremental borrowing rate at 7% to discount this 1,50,000 being an additional amount. So let's start. Modification number 2. Additional ROU asset not considered as separate lease. Guys, if it was considered as a separate lease, then I would have only discounted 50,000 rupees. Here it is not discounted as separate lease, so I have to consider the entire lease of 1,50,000. Revised lease liability arising due to this should be equal to, I will start paying 1,50,000, but I will pay only for year 6, 7 and 8, only 3 years. Present value annuity factor 7% for 3 years. Calculate 1,50,000, 1 divided by 1.07, 2.6243 multiplied by 1,50,000, 3,93,650. 393,650 is your revised liability. Correct? Now, this is the revised liability upon the extra additional asset which is being given up, which is being erased. But what was the lease liability before? The carrying value of lease liability, the revised lease liability on reduction of lease term was 2,67,300. The revised lease liability on reduction of lease term of original lease. When my original lease was reduced to 8 years from 10 years, it had a value of 267,300. So therefore, what is the amount of increase? 3,93,650 minus 2,67,300 will give me an answer of 1,26,350. This is increase in lease liability. Whenever there is an increase in lease liability, I will also increase the value of lease asset or ROU asset in a similar fashion. So what should be the entry that I have to record now for this 126,350? I'll record the entry as ROU asset account debit to lease liability. $1,26,350. No profit or loss will be recognized unless there is a decrease in scope of the asset. We have already recognized when there was a decrease in scope what is the P&L. We have already done that. Here it is not necessary because the exact amount of change in lease liability should be the exact amount of change in ROU asset. Now, if I consider both modification or at the end of year 5, upon considering modification 1 and 2, both modification. First modification regarding reduction in scope of asset, that is by reducing the lease term. Second one by including an additional asset which is not treated as a separate lease but it has increased the amount of lease payments. Under both these situations, if I have to calculate lease liability, the carrying value of lease liability right now after all the changes is equal to, we already got the value. It was 393,650. 393. But what is your value of ROU asset then? My ROU asset, initially my ROU asset had a carrying value of how much? 3,68,000. Out of 3,68,000, because there is a decrease in scope, I reduce the ROU asset with the value of 147,200. Correct? So what was the value? First 3,68,000. 3,68,000 became 147,200 reduction. Let me write down that first. First it was 3,68,000. This was reduced by 1,47,200. But now it got added. What is the addition? 1,26,350. 1,26,000. So the ROU asset now value is 3,47,150. What is the amount of revised depreciation then? Depreciation per annum on ROU asset divided by 3 more years of useful life. So 3,47,150 divided by 3 result in an amount of 1,15,717. That is the revised depreciation per annum. Have a look at your answer. That is the last question of IND AS 116 where I had 2 modifications together. So what did I do when I had 2 modifications together? First, I assessed the original value. It was 1 lakh of lease payment made over 10 years. It is discounted at the rate of 6%. So the value of ROU asset and the lease liability initially are measured at 7,36,000. Modification only happened in year 5. Until then, there was no modification. Therefore, I have to calculate the depreciation over 5 years at the rate of 73,600 per annum on the ROU asset, and the value of ROU asset at the end of year 5 was 3,68,000. Now, I tried to determine the value of lease liability at the end of year 5. By preparing an amortization schedule, I got what is the value of lease liability at the end of 5th year. It was 4,21,225. On that day, at the end of year 5, there is a modification. How many modifications? 2 modifications. One modification with respect to decrease in the scope, where you reduce the lease term from 5 years, from remaining 5 years or the total 10 years to 8 years. So furthermore, life or lease term is only 3 more years. So because of that, I have to reduce the ROU asset proportionately and also determine what is the reduction in the value of lease liability. Look at the reduction or proportionate decline in the value of ROU asset. Yes, so proportionate decline by 2 years. So into 2 by 5 is the decline. I've already credited the ROU asset with a similar amount. What is the reduction in lease liability then? Reduction in original lease revised lease liability for next 3 years at the rate of 6%. If I pay 1 lakh, it is 2,67,300. While the carrying value of the lease liability at the end of year 5 was 4,21,225. Therefore, the reduction is 153,925. I debited the reduction of lease liability. I've credited the reduction of ROU asset. The difference I transferred it to P&L. Then I came into additional asset. The additional asset requires me to pay 1,50,000. Requires me to pay 1,50,000. So if I am paying 1,50,000 as a lease rental over the next 3 years, then discounted at the rate of 7%, my answer would only come down to 3,93,650. Correct? But however, after reduction of lease term, revised lease liability was only 267,300. Therefore, because of paying extra 50,000, I have to extra increase the lease liability by 1,26,350. So I wrote the entry as increase in value of ROU asset along with increase in value of lease liability. So at the end of 5th year, these are the carrying value of lease liability and ROU asset and the revised depreciation to be charged per annum. Have a look at your answer. We'll go round guys. Yeah, A took 359,600, we'll 735,900. I took 7,36,000. Little bit of difference. It's okay. This was 421,90 and 367,950. A little bit of difference. It's still fine. Yeah, 1,50,000 at 7% is 3,93,600. That should be the last revised lease liability. He first went around with calculating the modified lease liability after addition of the asset. Then he did decrease in lease term. I did the reverse, but ultimately the answer should still remain the same. The reduction of lease liability, forgot you people are not seeing it. The decrease in lease term has actually resulted in a decrease of 2,20,770. That is the decrease in the lease term. We almost got around the same answer. Let us look at the P&L what he transferred. He got 6,610 transferred to P&L. Lease liability decreased by 153 and ROU asset decreased by 147. Look at your answer. What was your answer as well? Something close. 153, 147, correct. 6,725 I got. You got 6,610. That is because of the approximation errors. He is identifying the increase in value of lease liability by increase in the value of discount rate as well. Increased lease space he has taken separately. You can combine both of them. What is it? If you combine both of them, 131,200 minus 4,900, the net increase is 126,300. 126,300 is the entry that I should have passed. Check 126,300 because of increase in scope of lease. 126,350 I got. Not 300, I got 350. Absolutely fine. A little bit of approximation error is always fine. I don't know if you should thank me or I should thank you, but we are done with discussion on IND AS 116. We are done with the discussion. I will talk about a small concept regarding your transitional provisions into IND AS 116, where we apply two approaches, modified retrospective approach and full retrospective approach. In maybe less than 5 minutes, we can conclude the topic. So, but this is our end of discussion on IND AS 116, where we discussed lessees accounting in detail, lessors accounting in brief, but we have also seen multiple other concepts or other matters which relate to sublease and the concept of sale and leaseback. Thank you. So let's start discussion on your transitional provisions under IND AS 116.